In this video, guys, we're going to talk about trading with a trend, whether we should be adding to our position or scaling out of our position in a trending environment. Stay tuned. Hey traders, a very warm welcome to you. All right, so this was a question from Krzysztof Sosnowski. I think I might have brutalized that name. Apologize if I have, but thanks for the question. Question was, or comment, should I say, on one of the videos. It's saying, okay, what about trading with a trend? That's fine, I get it, I kind of align with the trend, but should I be adding into the trend or should I be scaling out the trend? You know, sometimes it's difficult to know what to do. And it's a great question, guys. I love all your questions, love your comments. You know, so many of you out there are so thoughtful and thinking about trading in what I think is the right way of thinking about it. You're asking the right questions and stuff, and you know, when I get round to doing them, I'll kind of do a video when I can. There's a couple of us behind the scenes helping out and doing bits and pieces. So, but you know, when I get it, and you know, if it's something like this, then I'm more than happy to do a video because it's something I think about as well in my own trading. You know, and something that I know you're thinking about, and hopefully we can all benefit from. So the question is really, okay, do I scale out of a position? Or do I add to my position? You know, what do I do? So for me, and again, I'm not saying this is the right thing to do, but this is kind of working for me in the current environment, which is what we're all about. Okay, which is, you know, do we, if you can imagine, let's just stick a moving average on here. And let's just imagine we've got this kind of moving average here. Imagine we've got like a 5 period there as well. So we've got this scenario where this is a normal trend, a normal uptrend. It's quite strong, it's quite bullish, it's chugging up, it's pulling back, it's kind of pushing to highs, but it's, you know, it's stagnant. Sometimes you might get multiple days where it's, you know, sitting in a range, so to speak, and it breaks out and it goes on. And compare that to something that's just ripping, like kind of 4 or 5 green days, a little red day, ripping. So, you know, we've got to, if we're looking at uptrend here, kind of split these two, and I like to split them and define them. And I've talked about the 5 period moving average being a very useful tool. You know, if the 5 period moving average is keeping price in, and the 5 is really aggressive, by the way, if that's keeping price in, then it's probably more this side as opposed to maybe the 20 or the 10 keeping price in. It's more of a looser uptrend. Still uptrends, but looser. So when I'm trading this environment, personally, I'm always looking for a kind of 2 or 3 day move. I'm buying on a pullback, and I'm either looking to scale out of the position with a target and then look to re-enter and kind of play that game throughout the uptrend. And kind of I've done a couple of reviews, guys, of stocks that I've been in and out of the same stock, and I've had multiple trades from it where I've been waiting for pullbacks, waiting for wicks, waiting for the filter and trigger to set up, taking it 3 day move, either out of the trade or it starts to stagnate and I get a trailing stop on the final, whatever it may be. So, you know, for this, would be more of a scale type situation for me. Why? Because I know that the market is very, you know, it's not that aggressive, the trend. Yes, the buyers are in control, which is why it's a dip buying environment. It's why I'll always look for some level of dip to buy, some kind of wick or something to buy it, and then I would look for a push to highs. Now, am I leaving some on the table? Potentially, yes. However, you know, these will often stagnate for a while, maybe do a little bit more, then they'll push higher. So, and especially when you want a decent risk reward ratio, you know, if I'm looking for 5 to 1, 3 to 1 minimum, 5 to 1, sometimes you get these 10 to 1s, then that's what I'm going to do. I'm going to look to use the momentum on my side, try to get a good entry. If I get stopped out, then fine, which you do. And if you get a winner, run it for that 2 or 3 day. Very often you get that push, fill you on your final target. I was going to say hit your trigger and fill your final target together. Get you filled out of the position and look for the next thing. And you know, that for me seems like a better, more of a prudent way to do it. You know, if you start to add in this, then you're going to have to be prepared to sit through some hefty drawdowns, you know, relatively speaking. And if you're buying and then you're kind of adding and it's pulling back and you get it wrong, you can undo the trade, all the trade's good work. So for me, that's very much a scale type trading environment. However, when we see this, which is pretty rare, but when we see this type of thing, if I'm in this position and the market is really ripping one direction, and to be honest, guys, it's normally the other way around. Actually, I really prefer to scale in when, you know, there's real aggressive selling. I feel like I've got a much more of an edge in reading the price action for aggressive selling. So, but same kind of thing, really pushing. If I'm in a position, it starts to pull back, I will not scale. I will add to the position and I will tighten my stop up. So let's imagine that we trade an uptrend at the moment. Like I said, you prefer downtrends generally for this type of thing. Let's just put add here. You know, let's say we're in on a pullback here and it starts to push higher. If it starts to stagnate and pull back again, because it's so strong or so weak, that's when I'll be prepared to add into the position and do another batch and then bring the stop up to make the risk equal, if that makes sense. So let's say I've got a unit of risk. As the market goes in my direction, I can add to that position, move the stop up. I'm still risking the same amount. And I've had situations before, guys, where I've had multiple adds, and if you're in the right deal and you've kind of really decent size on it, of course you've got to keep your risk managed and all this kind of stuff, then you're in for the final flush or exhaustion move to the upside, and then you exit into that, and you're looking for that blow off top or blow off bottom. And like I say, very often it's the other way around. It's the downside when something's just collapsing, it becomes an easier to read, and you're just pressing into lows, pressing into lows, pressing into lows. And the only reason that differs from this is because that it's a real supply-demand imbalance, really heavy selling, really aggressive buying, whatever it is. And so you're leveraging on that, continuing for a much more period of time, and still keeping your risk managed. You're not going in crazy and going full size and having massive risk, but you're just going with the kind of dynamics of the market. This is a much more rotational market in a trend, so you're using those rotations to your advantage to get into the trade, but then you're also not letting them go to your disadvantage when you come out of the trade. You're saying it has rotated up. Yes, it could continue, but I'm expecting it to rotate back and mean revert as we chug up. So I'm using the little nuances of the deal, of the trend, should I say, to work in and out of the deal. Whereas, in this condition, you don't want to be doing that. You want to be kind of squeezing as much as you can out of it. And guys, very often you'll get stopped. You'll have a big full size on and it'll come back and stop you out. But you're playing for that kind of real explosive move when you're in a full boat, which really makes your month. And so you're prepared to do it. Now, is that the right way to do it? Who knows? You might find that actually scaling out into this exhaustion is the right thing for you. Very personal type of strategy, very personal. Everything's personal in trading, guys, isn't it? There's no right or wrong per se. But that's really how I segment my two types of strategies. And when I'm trading with a trend, whether I'm choosing to add into the trend or scale out and kind of reassess and come back in. Now, some people might say, well, that's pretty stupid because you're leaving a lot on the table. And yeah, there's an argument to say that you are, but I have a more of a short-term feel for when I've got that entry and when I've got that exit. And so I use that to my advantage combined with the pressure of the longer term trend, and keep rinse and repeat until it stops working, the kind of market changes or whatever the conditions may be. All right, guys, hope that's helped. Appreciate the questions. Appreciate all your comments. Don't forget to check out our channel sponsor, as I link to them in the description below. Take care. Bye-bye.